Next one up here, AMD, stock that a lot of people sold, and man, are they crying now at this point in time. People were selling this stock earlier this year at 80 bucks, in the 80s. And oh, are those people crying their eyes out now at this point in time, okay? There's a lot of things that happened in that conference call people didn't see, didn't go through. Got to go through these transcripts, got to listen to conference calls. Very impactful, okay? Right here, this is very important. Talking about basically the ramp of the business this year, next year, things like that. Say, we have a very good demand environment into 2026. So we would expect the MI355 continue to ramp in the first half of 2026. Keyword, continue to ramp in the first half of 2026. And then we mentioned MI450 series comes online in the second half of 2026. And we would expect a sharper ramp as we go into the second half of 2026 for our AI data center, AI business, right? And so clearly, like, the 350 series is doing very well for itself. Now, it's going to be nothing compared to the 450 series. Keep in mind, everybody wants the 450 chips, it seems like. I can't, like, the cloud service providers, like all the big dogs, they want that 450 series. The 350 series is kind of like, some want it, some don't. Some want it, to a modest extent. Some want it a little more. The 450 series seems like they have demand. They have so much demand for 450 series, it's going to be hard to even fathom how much demand they have for that, okay? But I love the word choice here, continue to ramp, as far as that goes, right? Stacy Rascon, if you watch the reaction channel, you know Stacy Rascon. Man's an AMD hater. That's how I coin him, because you know why? Man earlier this year said, AMD, I don't even know if we really need them. So disrespectful, unbelievably disrespectful to a goat like Lisa Su. Are you kidding me? Come on, man. Man's an AMD hater, so he gets on the call. He's real short. My first one, for data center in the quarter, what grew more year over year on a dollar to percentage basis, servers or GPU? Lisa Su says, yes, Stacy, I think our commentary was data center grew nicely year over year in both of the areas, both for our servers as well as data center AI. Yes, but could you, just directionally, which one grew more than the other? I'm not even asking for numbers, just directionally. Then the executive VP jumps on, directionally, they are similar, but server is a little bit better. And he says, server's a bit better, okay. And then on the guidance, so you said that servers, data center overall up double digits. You said servers up strong double digits. What does that mean? Is that like more than 20%? Or like, how do I think about what you mean by strong double digits? Because again, I'm trying to, for the GPUs for the year, do you think you were saying roughly like 6.5 billion or I like? Then the executive PVP steps in. Stacy, here's what we guided. We guided sequentially data center will be up double digits, and we said server will go up strongly. And at the same time, we also said that MI350 also going to ramp. So we did not, I don't think what you just mentioned was what we guided. Pay attention, Stacy. Stop saying 50 times and pay attention. Then Stacy jumps on again, says, okay, so if you say servers are up strongly, does that mean they're up more than the Instinct? Because you didn't really make that commentary on Instinct. Lisa Su steps in and says, no, look, Stacy, let me say it. So data center up sequential double-digit percentage. Both server and data center AI are going to be up as well. And from the standpoint of where they are, I think we're pleased with how both of them are performing. The strong double-digit percentage comment perhaps was applying to year-over-year commentary. And Stacy Rascon dips from the conference call, right? And it's just funny because oh gosh, the guy just comes off as such an AMD hater. Even if he doesn't intend it to be like that, when you say things like you're not even sure you need AMD, then you hop on a conference call and you're just ugh, right? And it's funny because look at the other analysts, look at how they will ask their questions, and then look at the response Lisa Su will give here versus those other responses they would give him back, right? Look at how in depth it is versus him. Look at this. Lisa Su's talking in paragraphs, right? Stacy's getting sentences back because they know he's a hater, right? Look at this. So it's just ridiculous, right? And AMD's got plenty of haters out there. Okay. no one talks about the elephant in the room regarding AMD. And I got to speak about the elephant in the room because it's such a big elephant in the room. It's massive. And it's like almost like the elephant blends in with the paint because no one can even see this dang elephant. Okay, listen. AMD, everybody and their grandma knows this company's about to have a tsunami of money coming in their way, right? We've already started to see it. This is on a trailing 12-month basis, looking at 1000xstocks.com here. Look at the free cash flow of this company, skyrocketing. Look at the operating cash flow of this company, skyrocketing, okay? The thing that no one's talking about, keep in mind, this is still like, those numbers you're seeing, little money. Just wait to see the free cash flow and the operating cash flow a year from now, 2 years from now. You're going to be in shock, okay? So we know a tsunami of money is about to come to AMD. My question is, what are they going to do with all this money? They're going to have money coming in the crates over the next 2 to 3 years, right? What are they going to do with it all? So they could do a few things. They could do massive share buybacks over the coming years, right? Now, OpenAI is supposed to buy a ton of chips. Then OpenAI is supposed to get a part ownership of AMD. With how much money AMD is going to have incoming, like they might end up just being able to buy those shares back off the market, right? So keep that in mind. There might actually needed to be like massive dilution to the shareholder base. They could start paying fatty dividends to all of us shareholders. That's a potential, right? I don't think that's the most realistic. I think a share buyback's more likely than dividend, but it's a potential. They could buy out other companies in the space. That's always a potential as well, right? And they already have an amazing team there. So, I mean, they can always add some talent here and there, but gosh, their team is already unbelievable they have there. And so there's not a lot for them to spend a ton of money on, other than I guess they can spend it on massive share buybacks or do something creative financing-wise with the company. But if you look at like NVIDIA's obviously had boatloads of money coming in. They don't even know what to do with it. Like they're investing in other companies because they have so much money incoming, they don't even know what to do with it, right? AMD is about to have that problem. AMD is about to have that problem. It's clear as day. We haven't even seen the 450 series numbers yet. Like if you think this is big in terms of the growth of free cash flow and operating cash flow, just wait. Wait a year from now. Wait 2 years from now. Get ready to have your flapjacks flipped in regards to that. So yeah, that's a subject that should get more attention. Is we know AMD is about to make just ridiculous money. What are they going to do with it all? They could just build up that cash balance to massive amounts. Keep in mind, you can still get 4% on treasuries. So they could build up that cash balance in a massive way, right? Put that in treasuries and just earn unbelievable amounts of interest income. They have very little debt on the balance sheet. They could get rid of that as well. Like just get that off the balance sheet and then just put massive amounts of money into treasuries as well if they want, earn that 4%, which goes straight to the bottom line, helps out profitability even more. And yeah, very exciting, very exciting. So nonetheless, folks, AMD is a phenomenal stock. And don't forget, ladies and gentlemen, do not forget, 6 months ago, people made fun of this stock. People called it advanced money decimator. They made fun of it. They thought it was a dog stock. They thought it would never start to run, right? Man, has the tone shifted now. AMD now, really over the past month, I think AMD's become the most exciting stock in the stock market. Like there's two stocks that come into my head if I think about the past 1 to 2 months and the two stocks that really, let's just call it the last 60 days. Now 60 days, there's two stocks that have become the most exciting stocks in the market, in my opinion. AMD and Micron. MU is benefiting huge from AMD because AMD is going to use a ton of Micron memory in the 450 series, from my understanding, and other series as well. And so MU is a huge beneficiary of that. And so memory is just a hot play right now, and people play MU for that. And so those are two stocks that in the past 60 days, they just have turned into absolute beasts. And people are no longer laughing at them. Now they're saying, why didn't I buy that stock? Like, and this is a stock I spoke about. How many videos did I make on AMD over the past 12 months? Like, it's ridiculous. I started talking about this stock at the end of last year, and then I spoke about it like relentlessly the first 6 months of this year, right? Banging my hand on the table like, AMD, you guys got to look at this. Like, people aren't paying attention to it. They're not even paying attention to what's going on here. The 450 series is going to be huge. Now some people are waking up and they're like, oh, wait, this 450 series, this is going to be huge. And it's like, dude, we were on this 6 months ago, 9 months ago, 12 months ago. Where were you at? that. For the pinned comment down there today, I'm going to put the application if you're looking to apply to join my private stock group, private wealth group, all that good stuff. Remember, January 1st, we're moving to $100,000 minimum net worth to join in there. So if you're under 100K net worth, you might want to get in there before January 1st. And also, we have our new lifetime membership card for anybody that joins on a lifetime membership. Usually just get your Steel membership card for 1000X and your private group Steel membership card. But now if you're a lifetime member, you get the black card as well. So do keep that in mind. And then we're now up to 2,849 members of the private group. So I'm thinking about potentially closing the private group to new members when we hit 3,000 and then opening it back up at some point in time in, let's call it 2026. The demand's been overwhelming in there. Just yesterday, we received another 100 applications after receiving 500 applications last week. It's been ridiculous. So that's going on there. Pinned comment down there if you're looking to join us in there, okay? Okay, let's go ahead. I want to react to this piece around Oracle here because I think this is really important. It's not just around Oracle, it's around AMD, NVIDIA. The whole AI movement right now in these sorts of things is really important.
It's still coming. I mean, the whole space, they've already pledged that they're going to increase spending next year. That is going to be funded by debt primarily.
Yeah, so they don't have the cash flow problem at the moment. That's not where they are. But, you know, when they talked about that enormous backlog build, the margins on that backlog were much smaller. And now we have, they're likely to have higher interest expense, right? For two reasons. One, just the magnitude of how much debt they want to sell, and others as well, so that market could get saturated. And then some concerns about, okay, well, what is the promise of this data center return? And so do we debt holders need more interest?
Right.
So you can see how you get into this sort of negative spiral there. I don't know how much of it to make is just a little bit of like a frenzy right now. My gut is that it's more structural than that. It is a bigger problem. Even while we're talking about this, just today, right? We saw huge deals. It's almost like a race to just get your headline number out there. I don't know if that's to get a position in line for debt. I'm not quite sure what that is, but when you look at Meta's response, the stock's response to that build, that's, as a shareholder, very, very frustrating. I think if they were, you know, if we were to see the year of efficiency next year, I know that's not Mark Zuckerberg's plan at all. Right. But that would be very nice for the stock.
2.0 would be probably pretty good. What does that chart look like, Oracle, the decline?
I mean, we can talk about the chart for a second, but I think the real thing is if one were sitting there and they were just graduating with their PhD in finance and they had to present themselves in front of the committee, and the committee said, well, you've made an analysis on Oracle. And they said, yes. Did you use a dividend discount model? Did you use enterprise value EBITDA? Did you price the sales? Some of the parts. How does anyone explain, myself included, how a stock can go from 250 to 350 back to 250 in a matter of weeks? Is anything changed? The debt's not new. The story's not new. Just because it's in the news, there might be some issue with margins. They're overstating this. But this speaks to the vagaries of markets. These are risk assets. Right? Now the question is, but here, and to your question, do you buy this 35% sell-off? My hunch is that just as it was in favor, now it's so almost out of favor that I think you can play it for a bounce.
Oh, so bad it's good in this case.
Well, it's an extreme move. You retrace the whole thing, and again, that's a trading judgment. I can't speak to it, and I would never want to, because clearly no one else can, what this thing's worth, right? No one has a clue.
Yeah. Julie, what's your...
So Carter, generally, I'm not in love with his takes because he's a technical guy. He's like looking at the trend lines and this is technical, blah, blah, blah. But he makes a great point in regards to Oracle. No one can properly value this thing right now, including even myself. I've been running valuations for 17 years. I can't run numbers on Oracle right now because I honestly have no clue what their actual revenue growth is going to be looking like over the next 3 to 5 years. I can run likely probabilities on Meta stock, on AMD stock, on Amazon stock over the next 4 years, and what their likely revenue growth will be around. Oracle, I just can't do it. Like, there's one side of me I could see Oracle growing at like 10% revenues. Another side of me could see Oracle growing revenues at like 20%. Another side of me the numbers are so dramatic. Like, they could do a 30% number. The numbers are so dramatic. Like, it's ridiculous. The margins, I have no clue what their actual margins are going to be. They're talking about these margins might actually be really bad in this business. So they talk about some of it might be loss leader type stuff. That is like, I don't know how to, like, you can't run numbers on Oracle right now. What's the profitability of this going to be? They're taking out supposedly massive amounts of debt that they're going to have to pay interest on. So they're going to have a huge interest expense. The company already has an insane debt load on this company. It is like Oracle. One side of me is like, I would like to buy that stock. The other side of me is like, that's a mess. I don't like, how can you accurately run numbers? At some point in time, you might be able to, and maybe that's the moment. Like if I could ever actually run numbers and have confidence that like this is a roughly, I could probably buy Oracle stock. But until that happens, or until their balance sheet gets clean, the other problem is their balance sheet's a mess, and it might get a lot messier. Tough in regards to that one. And that's very different than Meta. Meta, you can say, okay, yeah, they're spending like insane. Zuckerberg's back to spending like a drunken sailor when it comes to CapEx. But you know roughly, Meta's going to likely be growing revenues 15 to 22% a year over the next, 4 years. That's highly probable, highly probable. Somewhere in there roughly. Maybe a great scenario, they push up to 23 or 24% revenue growth on average the next 4 years. Okay, somewhere in there roughly. You can then run your net income projections at a little bit better than that, right? Net margins increase. Like you can run a realistic scenario. Same thing with Amazon. Same thing with AMD. Oracle, you just can't do that. No one can really do that right now, and that's why this stock is round trip. Because people were so excited when they heard the deal, right? Oh my gosh, like OpenAI and the Oracle deal, that was so exciting. But now people are like, we don't even know what this means in regards to the numbers.
Take on this, and if we can put up the chart that shows the decline in valuations. I mean, Oracle's valuation is down 30% from its peak of 45 times. It's 32 right now. I don't know if you think that is worth a play for the bounce, as Carter says.
It still feels a little bit rich for me relative to what we can see is that there's just a precipitous decline in the returns on investment that people can expect. Everyone can kind of recognize that Oracle is not the same type of business as a lean software business. What I think really has changed and has impacted all of these players is just this transition away from we're going to fund this with cash flows, which everyone felt fine. But suddenly when we're talking about debt,
yes,
and we're doing secret debt with special purpose vehicles, like what happened with Meta, I think suddenly that really, really changes the dialogue. And then it gets only a little bit worse when you have OpenAI CFO asking for a backstop on their debt, like asking your dad to co-sign your loan on your first condo. Like, that's just not how this works. And I just think that that has really spooked the market because we can all recognize that the minute debt gets involved, that accelerates the declines if they happen.
I mean, there have been a couple of major shifts for this sector. I mean, Julie touched on one of them, and that is funding spend with debt versus cash flow. And the other one is just the model turning from asset light to asset heavy. And how do you account for the depreciation of?
This is an important gem I'm about to drop here, okay, in regards to debt, how it works with stocks. Okay, listen. If you have a proven thing you're doing and you take out debt, investors can understand that. So let's say I have a very successful let me use an actual real life stock example of a stock I personally own. Cheesecake Factory, okay? Cheesecake Factory has two concepts. They're going to expand all over the United States over the next 5-7 years, right? One is Flower Child, the other is North Italia. They're going to be able to build massive amounts of these locations. We know those locations are phenomenal and very profitable. So if Cheesecake goes ahead and takes out debt, right, and has to pay 5-6% interest rate, whatever, on that debt, right? We're all fine with that. Because we know they're going to build all those locations and they're going to make tons of money because it's been proven. Now, where you have a problem is when you're a company and you're going to spend on this technology that's unproven. No one knows if it's going to be profitable. If it's going to be profitable, how profitable, what are the margins going to be? What's the actual revenue growth rate? No one knows anything. That is what starts to scare people. And that's what's going on with some of these companies now, where they're taking out debt to build these facilities that we don't even know if they're going to make money, how much they're going to make money. Like, that's an issue. Because now you're just talking about, you're just having faith. Like, I just hope it works out. Versus like, this is proven, we're doing this, okay. That's where we're running into issues in regards to this whole AI movement now at this point in time.
This build out, I mean, these are major questions, fundamental changes to how we would view these stocks.
Yeah, we've talked about that as well. Michael Burry's written about that too. A lot of people have been talking about it now in terms of what's the right depreciation schedule for this industry sector, whatever you want to call it. Now, they're going from...
Oh, shoot. Oh, boy. Okay, so that's in a whole other can of worms. Oh, no. Oh, no. Okay, so we're going to go even higher level here, okay? Depreciation. listen, these companies are spending fortunes of money on all these AMD chips and these racks and everything that they got going on there, right? These companies are going to have to depreciate all that over time, which that depreciation is going to hit their earnings substantially. Now, you could value these companies on EBITDA, metric, earnings before interest, taxes, depreciation, amortization, but a lot of people don't, right? You might look at the net income. So that depreciation of all these chips and all this equipment, it's going to hit hard, really hard. Because remember, these companies are spending tens of billions of dollars on this stuff. So you're going to have a wave, a tsunami of depreciation coming over the coming years. And all of a sudden, you're going to start to look like resort companies. Like I own a company, Wynn Resorts. They always have massive depreciation, right? Always massive depreciation, like because they run resorts and like that's a real estate business. Like you have huge depreciation. Well, all these companies spend fortunes of money on all this equipment, all these chips, massive depreciation come. That hits your earnings. And then you might not be able to command as high of a valuation because, that PE, that's a fair point.
A 6 to 8 year depreciation schedule, but you go back and look at some of the comments out of some of the CEOs, and quite frankly, in my opinion, there should be like an 8 to 12 month depreciation schedule if you really look at it and examine how quickly things turning now. So that changes the entire narrative. In terms of the debt raising, that's one of those things, Karen can speak to this. Nobody cares about this stuff until they begin to care about it, right? It's great on the way up, the same way, buying Bitcoin every day and creating the treasury strategy works, but when things turn, everybody starts pulling the microscope out, and that's when things get a little dicey.
Yeah. We've seen spreads widen, right?
We've seen spreads widen.
CDS.
Right, exactly. They don't care about it until they care about it. So if you can raise debt for free, and a lot of companies could raise debt for free, then you've got a nice, then a lot of models work that wouldn't work otherwise. But then you get into the vicious cycle of debt being more and more expensive and the project being less and less profitable. So that's not a great place to be. I think the Oracle move, I also think it is just...
Yeah, it's a nasty double whammy, ladies and gentlemen. It's a nasty double whammy because you have the depreciation hit, which is going to hurt your profitability substantially, right? Even though depreciation is kind of a non-cash expense, it's still going to, because you already spent the money. Like, it's not, like these companies already spent all the money on the chips. So it's not like when you depreciate, like you lost a bunch of money, like you already spent the fortunes of money anyways, right? But that hits your profitability. And then if you're taking out a bunch of debt and you got to pay a bunch of interest, you got a massive interest expense line item, which also, guess what? Hits your profitability as well. Then if you're also spending down your cash balance on all of this, well, that cash balance then can generate you a bunch of returns in interest income because you have it in treasury. So that's a triple whammy. Whew. So, you see these stocks pulling back right now, a lot of these big techs, and it's not like it's for no reason. It's actually for good reason because there's several, problems emerging here. And unless you're a company that's going to be able to grow at a rapid clip, you're not going to be able to justify the spend, all the depreciation, and then all the interest you have to pay on the debt.
A proxy for sentiment about the entire space, whether or not you have anything particular on Oracle or not, huge liquid debt, CDS swaps, there's tons to do. And this is sort of just tells you how the market feels about that much debt.
For more on Oracle and the pullback in the AI trade, let's bring in D.A. Davidson, Head of Technology Research, Gil Loria. Gil, great to have you with us. I know you were listening in to our conversation. I mean, in your view, is Oracle some sort of a canary in the coal mine? I mean, is this sort of the cautionary tale that a lot of these other players will fall to in terms of, the optimism fading away, the concern about the debt levels growing, et cetera?
It's a cautionary tale in the sense that they represent the bad behavior in the AI build-out. Oracle and CoreWeave are the bad behavior. Microsoft, Amazon, and Google have all the customers, have cash on hand, and have tremendous cash flow. So when they build a data center, it's already sold 3 years in advance. And they just told us 2 weeks ago that just over the last 90 days, they've seen a positive inflection point in demand for AI from their customers, which is everybody. So that's healthy, responsible investment. The irresponsible investment, as you've been talking about, is when you start borrowing to provide capacity for startups. And that's what Oracle did. Oracle originally told us on their earnings, we just won $300 billion of backlog from several companies. The next day, we found out it was only OpenAI. Then we subsequently found out that OpenAI has committed $1.4 trillion and has no intention of living up to those obligations. It considers it a flexible arrangement that they can consume as much as they want. So they commit 250 to Microsoft and 38 to Amazon and 25 to CoreWeave, and they'll spend what they feel like. So we know that it's not real demand. And then we found out that Oracle's margins on this business are so much lower than the core business that we're not sure that we want them to grow this business. They said 30-40% gross margins on this business, if that's a good thing. Their core business is 80% gross margins. This is a bad business with very low margins when you don't have the customers, which they don't. All they can do is resell this capacity back to the people that do have the demand, which is Microsoft, Amazon, and Google.
So at 227, we've basically done a full round trip in terms of the gains that Oracle made on all the optimism and then fallen back. Are we at a level here that's sort of as stable, or should we look at Oracle differently because of the way they manage the message?
It's more stable at 32 times earnings than it was at 45 times earnings. Because let's not forget, the core business...
Should it be lower because of what they told us, which didn't come to fruition?
Yes. Yes. We should definitely keep everything they say from now on with a little more grain of salt, just because of how this all transpired. But Oracle itself has a core business that grows 5%, that is very profitable. It does have a cloud business that's growing. Let's forget about the OpenAI false promises. Their core business in cloud is growing. They have good customers there like ByteDance. They may end up owning a piece of TikTok USA. Those are reasons to get excited about Oracle beyond the core business. But OpenAI and that $100 a stock in Oracle stock of appreciation, it makes a lot of sense that that's completely gone away now.
Yep, Gil, listen, absolutely. I think you're right. Their cloud business, probably low to mid-margin stuff. So, maybe it's not deserving of the multiple. So how do you back of the envelope do it? I look at this and say $8 next year, a 25 multiple is historically probably about right. It gives it a $200 stock. That's where I think the value should be found in Oracle.
That's right. When we get back to the 20s or the mid-20s, it could become interesting. Right now at 32, it's not cheap. It is still getting credit for the cloud business doing better. And again, part of the cloud business is a good business. The part where the traditional hyperscaler business, where their big customers are companies like Zoom or ByteDance, that's a fine business. It's not as good as the core business, but that's a fine business. The renting out GPU business, if they have a positive margin at all, it's very, very low.
Gil, it's Karen. Thanks for being on. What do you think it would take for any of these companies to tap the brakes?
I think OpenAI is there's going to be a reckoning around OpenAI where they have to either make firm commitments to capacity or walk away. So there's going to be a lot of renegotiating of that $1.4 trillion they've committed to. There's maybe tens of billions of real demand they have over the next couple of years. So they're going to have to go around to all these companies, Amazon, Microsoft, Oracle, and CoreWeave, and say, this is the actual demand that we can pay for next year based on how much money we've raised. And once we have that, all these companies are going to have to come back to us and tell us, here's how much we have to adjust down our backlog. This is real. And once we know that it's real, we'll have a better sense for what the business is. But a lot of this has been caused by OpenAI inflating expectations across a broad set of companies. It's not just CoreWeave and Oracle. It's also companies like AMD and Broadcom where a lot of that valuation has to do with promises from OpenAI. AMD yesterday at their analyst day talked about these phenomenal growth rates over the next few years. We don't know how much of that is OpenAI committing to volumes there based on now owning 10% of AMD. Maybe it's the biggest part of growth there.
Whoa. Hold your horses, sir. Hold your horses. Just one flip and flapjacking moment, sir. OpenAI does not own 10% of AMD yet. In order for OpenAI to own 10% of AMD, OpenAI has to buy a ridiculous amount of AMD chips over the next several years, starting in the back half of next year in 2026. So that's important to understand. It's not like AMD's just like, here's 10% or AMD's, here's 10% OpenAI of our company. Like, no, there's a bunch of purchase commitments that have to happen. If OpenAI makes those massive purchase commitments over the next several years, then AMD will then give 10% of their company roughly to OpenAI. So just keep that in mind. And obviously, if OpenAI makes all those orders, like to AMD, like AMD is going to be glad they did that deal, because that's massive. And obviously, AMD's already got great branding because of this deal. The fact that, OpenAI, I don't want to say he's going all in the 450 series, but with how serious they're taking it, now that basically gives a sign to every single company that's in this space that the 450 series, you have to have that from AMD. And it seems like every big tech's going to want